Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so what hedge funds and the big players in the market are doing, how they're adjusting their orders and moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical structured zone for this market, which was acting in fact as previous support here, again acting as support here and here. And what we can notice is that at the moment we just had once again the test of the level. The market started rejecting it to the upside. So in a situation like this, more bullish price action could be created and expected away from this very strong monthly support and demand area. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, the situation is quite clear. We can notice how very strong demand and support has just been tested. From here, all this previous rejection to the upside was created. The market just tested the level again here and started rejecting it to the upside quite aggressively, breaking above all resistance. In fact, if we look closely, we can notice how all the resistance that the market had found at this level, in fact, the market multiple times got rejected to the downside away from this zone, has now been broken to the upside. And what we know is that previous resistance, once it gets broken to the upside, becomes support. So what we could expect at this point is a potential retest of the previous resistance turn support, and then to see a rejection to the upside away from this level. Dropping down on the daily time frame, what do we see? Now here on the daily, I did speak about GBPUSD just a few days ago. When the market was here, I explained all the reasons for which we could expect this rejection to the downside. And then again, when the market had created that move and was here, I explained all the reasons for which we could expect a rejection to the upside away from this level. And in fact, that is exactly what the market did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. Now, at the moment, as we were saying, as the market has created this move to the upside and broken above all structure, we have to identify the new structure for this market, because as we have this impulse to the upside, after an impulse like this, the market is supposed to follow with a correction. And in this case, the correction would retest also the previous resistance turn support that we have previously identified. Now, if we want to measure a correction, we have to take our Fibonacci from the low to the high of the impulse leg. And what this shows us is that we have the 0.32 Fibonacci retracement lining up around this area, which is also previous daily resistance, which now that the market has broken into the upside is turned support here. So this is actually confluence of support. And if the market will correct to this confluence of support area, there is very good probability of seeing more institutional longing inside of a confluence of support area, which at that point could further increase the probabilities of a potential push higher away from this zone. Now, speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders, and let's check the data precisely for the pound. Now, keep in mind that if we're checking the data for the GBP, we're actually already checking GBPUSD because all currencies on the spot are traded against the USD. And what we can see is that with the last reports, net positions have massively increased. We went from having minus 27.7k net positions, so a situation in which we had way more shorts than longs on the institutional side of the market with 80.5k shorts compared to only 52.7k longs, all the way up to now having a positive net positioning of 46.3k net positions with the complete opposite, so way more longs than shorts, 91.9k longs compared to only 45.6k shorts. So GBPUSD is getting quite strong from an institutional perspective. And by the way, if you still haven't, make sure to go and join my free Telegram channel, which you find here on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. Let's keep in mind that institutions are longing GBPUSD and move back to the technical aspect of the market. Now, as we were saying, if the market will move back to this confluence of support, there is good probability of seeing even more institutional longing than the one that we're already seeing, which at that point would even further increase the probabilities of a potential push higher away from this level. So if the market will correct to this confluence of support, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what would I expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential push higher away from this confluence of support level fueled by more institutional longing. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.